Hi, everyone, and welcome to Marketplace Masters, the show where we showcase the latest thinking, insights, and strategies from leaders shaping the future of e-commerce marketplaces. I'm your host, Paul Sonneveld, and today we're diving into one of the most talked about topics in the Amazon agency space right now, mergers and acquisitions. Whether you're building, buying, or just trying to stay ahead, understanding what's happening in the M&A world is absolutely critical. And that is why I'm thrilled to be joined by Chris Fryburger, founder of Enreach and the author behind a comprehensive report on Amazon agency investments and acquisitions. We're going to talk trends, buyers, multiples, growth levers, and the real story behind deal flow. Plus, you'll get the opportunity to ask your own questions during our live Q&A. So make sure to pop your questions in the LinkedIn comment section or on the YouTube comment section if you're joining us via those two platforms. All right, let's jump in. Chris, welcome to the show. I think you're still on mute, Chris.
There we go.
Excellent.
Thank you, Paul. Thanks for having me on. Thanks for having me on Marketplace Masters. You have quite a guest list. I'm honored to be part of it. Thank you.
Great to, as we were chatting a little bit before the show, it's a very topical conversation. Many agencies, owners, certainly in the Amazon space, have been at it for a number of years. They're all starting to think, okay, what's next? How do I maybe exit? How do we go from there? So let's dive in and really start with kind of the top line here. And I want to go back to this report that you recently released, the Q2 2025 Amazon Agency Investor Report. I mean, at a really high level, what are the key takeaways for agency owners?
Yeah, the report itself was really a reaction. Kind of, one of the other things I do is track the industry for data for size of industry of agencies and capabilities and the like. My specialty is around tracking those agencies, helping them grow, and ultimately find an exit through Enreach. And so there's a number of things that I track on that, and really also my own self wanted to really learn Chat GPT as well as far as a research tool. And the new deep search had just come out, so I really did a deep dive using my data, some industry journals and things like that into the space, and out came really a document that I then fed back into some other M&A GPT, some other chatbots as well, and out came a 50-page report out of that was polished. I'm still honestly trying to get my arms around it myself. It's chock full of information as far as things that agencies should be focused on, the 12-month plus mark, and if they're looking to sell really in the next year, things to focus on, and then really the process thereof and what the market looks like now. But really the key takeaways for me, really the focus, one of the focuses of the report, which is what we're focused on, is the economy, the effects of tariffs on the valuations of agencies. And then really I was prior to that also focused on AI and the future of that and its effects on agencies as well. And so there's a lot of moving targets in there, and that report really talks about a lot of things affecting agencies today, if that makes sense.
Yeah. So how would you characterize the sort of the industry at the moment and the level of activity? There's certainly, I think, a perception that maybe some of the M&A activity has slowed down somewhat. What are you seeing?
Yeah, so I think and in all fairness, I think one of the things that the first M&A experience of this whole space was really around the aggregators and the activity around brands. And so I think investors, even owners, we all sort of have taken take a step back from sort of the investment world, if that makes sense. And so I think it's fair to say that there was a plethora and a growth of agencies. I think we have a graphic you can pull up as far as the number of agencies that exist sort of over the last 5 years. But really, there was a explosion really coming out of COVID. You can think it's really just sort of as the that one there. You can see coming out of really 2015. Again, I'm tracking the number of agencies out. There's roughly about 750 agencies of certain criteria in the world right now. But what the interesting thing out of this graph is that it not only was there an explosion or increase in agencies, really the number of sellers and thus the number of agencies, number of brands coming on, the amount of need, and thus the number of agencies really coming out of COVID was an explosion. But really, we're seeing that the number of agencies has dropped off for a number of reasons, it's really hard to get into the space. It's really hard to deal with Amazon. I don't need to tell an Amazon agency owner what they have accomplished. I refer to them as unicorns versus sort of horses, like a normal digital agency that doesn't speak Amazon, maybe focused on Shopify, has done the last 20 years of Google, is really in horse, whereas these are unicorns. And as you can see from this graphic, really the number of unicorns is kind of set, and that thus gets to some of the multiples we'll talk about that we're seeing in this space as well. But I'm not sure if I answered your question or not in that whole thing, but yeah,
No, no.
I think the answer is there's plenty of agencies. It's still early, honestly. The space is, I know it's hard. A lot of sellers have been working with it, Amazon for 15 years, but really, I really equate it to the almost, really 2005 Google days when you still had SEO agencies, you still had PPC agencies like that. There's still a lot of maturation to go on. But,
Yeah, look, absolutely. I mean, we'll get into sort of more kind of, who are the buyers and sellers shortly, because I think there's some nuances there too. Like maybe the buyer profile is changing somewhat too. But yeah, let's just go to the headline question, right? I know there's agency owners that just jumped on. They just want to know one answer. What are the multiples doing? Are they up and down? It's never as simple as that. But we'd like to kind of simplify our lives, right? What are you seeing on multiples? And I think you've got a slide on here as well. So I'm just going to bring it up and let you talk to it.
Please. And so, what the slide will show is we're really seeing sort of four buckets of types of agencies, right, or sizes of agencies right now. I think if you might be at the bottom of this page.
Oh, yep. Yep.
And the next, there we go. So, again, keep in mind that I come from a world where, in the traditional agency world, where an average agency really had hundreds of employees, measured, often the revenue is measured in billions in some cases, and very large consolidation has gone on, whereas this space is still very young. And the largest agency in the space really has about 250 employees. Now, there's a big mix as far as overseas and the like going on, but revenue really, crossing more like 20 million or so. It's the largest agency in the space, and really, there's only a couple dozen that are even approaching that sort of that top smallest bucket up there of really multiples of 6 to 8x is what we're seeing for those largest agencies. At the bottom, sort of, the other bookend of this is really the tiny agency that's really a million less or so in revenue, maybe half about 0 to half a million in EBITDA, of which the bulk of agencies fall in this bucket, are seeing somewhere between maybe half to 2x of their EBITDA in that case. But the average agency, and I think I've got another slide for that, what an average agency looks like, really falls in that second criteria, where you're looking at roughly this agency, and again, I would say almost a quarter of agencies fall in this bucket, maybe less, maybe more like an eighth fall in this bucket, where they were established, again, more of like 2016 or so, revenues crossing somewhere around 5 million, really somewhere around 45% margin in that. So again, about 2 to 3 in EBITDA, depends if they've made big hires and things like that, how they've arranged themselves. 35 employees really is around the average as well. Again, I would say about 40% of those employees are remote on average, say Indonesia or other places of contract work. And then, do speak some other languages, other a little bit of Walmart, probably a little TikTok, things like that as well. And this kind of just is what a normal agency look like, and you're looking at a multiple of this type of business around 4 to 6x. Where again, if it was all things align, clients align, teams align, founders, everything looks good, you're looking at around this kind of multiple.
Yeah. And just to clarify for the audience, when you're talking multiples, you're talking EBITDA multiples here, right? Just
correct.
Just make sure that different industries will.
Yeah, and everything here is obviously in US dollars as well. To clarify that also.
Yeah, absolutely, absolutely. So let's talk about, I guess we know who the sellers are, right? Or we tend to, but buyers. I mean, I've seen a range of buyers. Other agencies picking up agencies because of maybe footprint reasons or client reasons, or not always even strategic reasons. Mm-hmm. Obviously, then you've got your large holding companies that are acquiring capability in that space. and then there's a couple of people out there trying to put multiple agencies together and get sort of, build a kind of a super agency, presumably then to flip again. A bit like, I'm trying to, well, I won't name any names
A bit
right
of a
now, but yeah.
like a roll-up model.
Yeah.
Yep, absolutely.
Yeah. So, but I mean, that's just sort of my anecdotal perception. I mean, what are you seeing in terms of types of buyers, and I guess more interestingly, which type of buyers are most active at the moment?
Yep, great question. You touched on, I think, three of the four buckets. There are definitely strategic buyers out there, of which there are different types, uh, uh, both inside and outside of the bubble that need to solve for Amazon still. I would say the most activity I find are, if you will, traditional digital agencies. These are really the agencies that are 100 million plus. Again, outside of this bubble, nothing like that exists inside. But outside the bubble, we're looking at high growth agencies. They're still doing Super Bowl commercials. They're competing with the Ogilvy's and the Omnicoms and the larger agencies. They're really that mid tier, 100 million to a billion size agencies. Believe it or not, they have not solved for Amazon. In some cases there have been acquisitions that have failed. But moreover, usually they tried to hire for it. And really, again, getting to the unicorn metaphor, it's really, really difficult to grow an agency, to grow a team, and have clients and the like, and do what these owners have done. And so, in some cases, these larger agencies are coming in for their second, third attempt to build a team to solve for Amazon, because guess what? They just lost a pitch, for, I'll use a bad example, make Nike, right? Maybe a piece of Nike's business, because they can't execute on Amazon. And so that would have paid for any acquisition of these, if you will, smaller entities that would solve these F1 racing teams that they can solve for. So that's where I see the most activity, for the most part. And then really the other activity really is other agencies looking to grow. There have been, like, a lot have had a flat year. In some cases, they're having to grow sell for the first time. It's getting harder and harder, to execute on Amazon. And so in some cases, they're looking to solve for that through a roll up. Get 3 or 4 of these together, and the result is a $50 million agency that can then sell for a lot more.
Yeah, that makes sense. I just want to acknowledge our audience is fielding quite a few questions. So I just want to say, Arthur, Phil, Jacob, thanks for all your questions. We will get to it. I promise you. We'll leave some time at the end to that. So please keep your questions coming. So Chris, I want to go back to the valuation multiple of 4 to 6 times for kind of a I guess the most common profile of agencies. That's certainly something that kind of resonates with me, and so I want to sort of hone in on that, because chances are people tuning into this are most likely to fall into that bucket. 4 to 6 EBITDA multiple. What are some of the differences between a 4 and a 6, right? So what are the characteristics about your agency, or the things that buyers are looking for, that's going to push it closer to the 6 mark than the 4 mark?
Sure. So first and foremost is going to be your financials, right? What is not only what do the books look like? How clean are they? You'd be surprised at some, again, first agency. A lot of these owners, the first time they've ever run an agency. So in some cases, that there's some opportunity within their books as well. But one looks for stability there. That also gets to kind of contracts. What do contracts look like, as far as, do you have 1 year, 2 or 3 year contracts in place? That could be that higher multiple. Think about risk, right? When I buy you as an agency, I want a couple things to happen. I want your clients to not go anywhere. So first of all, do they match to my portfolio? Do I serve those categories? Is that a match in that respect? I also we're interested in your team. Does your team complement my team? Because the most expensive thing are people. So if that team's cohesive and a running machine that doesn't need a lot of maintenance, that can be a multiple. What does the executive layer look like? In these small agencies, a lot of owners have not put in their management team yet beneath them. So they call it the lone man, or have the bus problem, where the owner gets hit by a bus, the agency ceases to exist. So is there a number 2 appointed, or a 3 or 4 like this? The C-suite kind of flushed out a little bit. That's another multiple. So it kind of goes on and on. But in that 4 to 6 is just a rough range. But really, it just depends on how many of those check boxes that they check off to determine whether that they're higher or the lower of that range.
Yeah. Two specific qualif questions from me, and that is around business mix. I've come across at least two different kind of scenarios. There's more, but like let's keep it simple. Two. One scenario is an agency that has a fair amount of content work. So not just the management of Amazon, the advertising or other channels, but creating assets, copy, all of that. Typically, I mean, we used to run a business like that, very profitable, used to be, maybe not so much anymore. I guess, and this other scenario that I hear a lot is agencies have a desire to build their own software platform, right? Have their own SaaS, solely driven by a belief that if they have some technical IP, then that's going to drive the multiple higher.
Yes.
So those two scenarios. I mean, what are your perspectives on those two?
Yeah, which actually is interesting is picking on the IP for a moment. One of the things that came out of the report was contrary to what my experience has been. For instance, there have been examples, again, young agencies, the tools didn't exist back then. So often a lot of these agencies back then were develop their own tools, PPC tools, management tools, operations tools, things like that, because nothing else existed, right? But in the end, that was often cast aside because it was replaced by a true tech stack from third parties and things like that. And so I was always the thought was that if you're going to go develop an analytics tool right now and you're an Amazon agency, those are really two different businesses. SaaS and agencies are holistically different customers, and so unless you're equipped with the internal resources and the money and the like, it could become a diversion. However, coming out of like the likes of Prosper Show in Vegas, as well as this report, I've actually changed my mind because we have the issue of AI coming, and so one of the things that my new AI report comes out, and by the way, I'll link this all in the show notes. All these free reports that I've been doing, but I did a deep dive into AI and really came out of and validated through at Prosper was there's a 5-year clock ticking on these agencies and all agencies, regardless of who they are, in the sense that a lot of the things that we do see now, obviously we're seeing creative go that way. We're seeing PPC being automated, things like that, with new capabilities that are beyond having humans at the helm. But often we're going to also see operations and things like that. So really, an agency in the end, take it to its fullest extent, is going to be an owner, maybe a small team of 1 or 2 or 3, maybe that's an ACD or some other operations person, and then your AI. And so your agencies can be just as good as your AI. So to answer your question, for a long way, I changed my mind. Your question is around, should they have IP? And the answer is yes. You should start solving for AI and IP around that. Now, whether you develop your own AI or you leverage another AI, the tools you use, things how you operate, you should be thinking constantly of how can I be applying this to, grow my agencies, have new capabilities for now, but ultimately it's going to end up being, taking over the operations of my entire agencies. I need to start planning for that as well. So, the answer is yes and no, I guess, to your question.
Thank you, Chris. And that's actually a really good sort of setup in terms of where I wanted to go next, which was, what are the top things that an agent should do to prepare, say, if they're looking to exit in 12 to 24 months. There's preparation, right? And there's a bit of a ramp up or runway. What are the kind of waypoints on that runway, and what advice would you have for agencies to start preparing?
Yeah, funny you ask. I am also developing an exit guide for agency owners as well, and so I'll outline a lot of those steps. 12 months out, 6 to 12 months out, 0 to 6 out, and then sort of the process that one goes through, things along those lines. It's going to be very helpful. But in synopsis, to answer your questions, obviously, first and foremost are your books. Make sure that everything is squared away there. Things like contracts, if you can start, as they become under renewal over the next year, you should be thinking about, hey, can I get a retainer in place? Can I get a 2-year contract at discount? Lock in that client, those type of things. Again, related to that, you might fire your least profitable or the one that's actually costing you. That's make sure you cull, those type of things as well. So I would have somebody audit your financials, have a professional that knows agencies, knows Amazon agencies. If you don't know anyone, I can hook you up. That's one of the things I do as well. But have a financial overview. But really, there's it goes down a list. One of the things I also see is I don't see a lot of agencies that really not in order. One of the things I don't see is agencies really talk about themselves very well. I don't see them really, forget the expression, but sort of smoke their own weed. You look at their website, you can look at the materials that are coming to the client, the interactions, things like that. You can always really tell how big an agency is by their own materials because they can never apply it to themselves. So I always recommend to people, look that way. Believe it or not, it's a multiple. It also drives the conversation with investors. The first thing they're going to do is hit your website, and it just sets the mood that you showed up with a tie on versus not. And it's just, and there's a whole bunch of opportunities in there as well. To answer your question, there's half a dozen things in there that I would highly recommend that people focus on.
Worth connecting with you on LinkedIn to ensure we get our hands on that checklist when it comes out. It's a great little prep tool, I'm sure. Let's go to the second most important question of this whole podcast, at least in the the first one was what's the multiple. The second one is what are the deal structures and the terms, right? And I think I actually just want to actually bring Arthur's question up here. So Arthur, thank you. He essentially was asking the same question I was going to ask, which was, how does a buyer usually structure a deal? What's the cash component up front? What's the earn out? And I'm sure the answer is it depends, and everything is negotiable. But what do you see, commonly?
Absolutely. Well, in my foray into this area, by the way, I am not an M&A advisor. I'm not certified to give advice. I'm not a financial counselor of any sort. I should say that legally, but all that said,
I should probably get a little banner up on the screen now just to put the big disclaimer there, right?
There's a big red X or something.
It's gonna fill the whole screen, and it's gonna be up there for 5 minutes. No, sorry, go ahead.
Yeah. So the structures can vary. There's the price of the company, and then there's the deal, the circumstances, the earnout, or I should say, typically is an earnout. So because it's an agency, it's not a software solution, or a SaaS solution. It's not a warehouse. It's not laundromat, things like that. It's an agency typically because it's service based. There is always an earnout involved. In some cases, if the owner needs to get out immediately, it would be a severe discount for that because of the niceness of the service. But typically, is the opposite end. Typically, we're seeing that usually it's 1 to 2 to 3 year earnout, depends on the circumstances, is most common. So you would get a little bit of cash up front. You would get then, or potentially it's 50% or potentially more, and then the rest comes based on performance and hitting some metrics to make sure that there's a smooth transition, both in clients and revenue, employees, and things along those lines. So the owner has to stay on board, make sure that that's a smooth transition, which makes perfect sense. Now, I would say, depending on the buyer, that there's other opportunities for that owner, not to just get out at that point, but also take potentially a comfy chair or take a chair at the helm of something larger. Again, in the case of a roll-up, potentially with further resources, and not necessarily being in charge of the company or the spaceship, be in charge of the analytics room, or be in charge of sales or things along those lines. You can be part of something larger. And that's definitely a phase I think we're going to see as part of this mergers that are going to go on in the next couple of years, is that opportunity. So again, there's a number of exits, but in the case of an earnout, usually it's 1 to 2 years. I have seen as much as 3.
Thanks, Chris. I'm going to throw you one more question, and then we're going to open up to our audience. So we already have a list of questions ready to go. But if you're tuning in here and you've got further questions for Chris, now's a good time to pop them in the comment section, and we'll get into them very shortly. So last question from, well, actually probably not the last question, but question before we open up. Mistakes. What are the mistakes that you've seen agency make that have maybe killed deals or really reduced evaluation? Think derailers, right? Watch outs, banana skins. What would you kind of put up there in terms of key ones that you've seen?
Yeah, I mean, first and foremost, I think going at it alone is probably the one mistake I see the most. Or I shouldn't say the one that's easiest to avoid, right? There are M&A experts at this, regardless of kind of any business that you're selling. Again, it could be that laundromat. I would recommend that they get representation, because just the sheer amount of communication that has to happen, negotiation, obviously then it gets eventually into legal and things along those lines. That you would think that you would have, hey, I have an accountant, or hey, I have a lawyer, but you would really want to make sure that you have an M&A agent that's not only has expertise in selling agencies model, which is completely different than selling laundromats, but also has Amazon expertise as well and knows the space and how much you're worth, and you can go to toe to toe and get that 4 to 6 multiple for you. So that first and foremost, I think that's the main avoidable problem I think that people are making. But yeah, I mean, there's a lot of things to avoid. I think it really gets to just prep to make sure that you allow enough time. If you want to sell, I mean, keep in mind that the shortest process that I've ever seen, I think that's true of the M&A world, regardless of this, is really 6 months. Takes just from the first meeting and dating to getting divorced 3 times to then getting married, and ultimately signing that deal can be often as much as 6 months, and if not longer in this space. And so just keep that in mind. But that said, there's preparation that needs to be done for that as well. So I think 6 months out from that as well to avoid some of those problems also.
So I was going to just saying it's a fairly intensive process, and certainly if
It is.
if you're also sort of a really founder-led business, it's kind of tricky, both sort of stepping out as a founder to run the process as well as keeping your business and keeping the revenue line going, because the last thing you want to do is sit in front of investors with a revenue line that points down, right? So yeah. Okay, let's open up. I'm going to hand the floor to Claudio. It's got a long question here, so I hope you can read this, Chris, but I'll read it out to you as well. Thank you, Claudio, for your question. Really appreciate it. That Amazon agencies have a strong presence of people and personal management among clients, managers, etc. So people are often key to kind of the success of a business. How can this aspect be handled to achieve a successful exit? How can employees really be preserved without becoming a limitation when selling the company? I guess he's sort of hinting at, people are really your core asset. So, how do you make sure that the transition piece doesn't go south and a whole bunch of people walk out the door and that sort of kills the deal?
Yeah, I mean, it's an excellent question, and I think regardless of it being an Amazon agency, I think the answer is it's the same for any sort of business that's sold, right? In the sense that you would want to make sure that you're communicative up to the point after everything's signed. By the way, you would want to be communicative out, and that's some sort of process to make sure that everybody's on board. I would definitely suggest that your number two, and again, maybe anybody with that you appointed as a SVP or CXO, probably should have some sort of golden handcuffs. Since they should have some interest in moving forward with the next entity. That for instance, whether it be I doubt in some cases maybe shares or shares in a future entity, things along those lines can make that team stay on board. But really, it's around I think around just communication, making sure that they know. Keep in mind most of these agencies are often kept open with their same front doors. Nothing that is maybe a virtual front door, but for the most part, they're kept alone, so that the clients don't, they don't see the URL change, right? They don't see the logo change and things like that. And so, in some respects, most of these agencies aren't changed at all. They aren't. They go forward even better, but under the same guise as they were before. So there's really not a lot of change from an employee standpoint. In fact, it can be different. They can be given a raise. They can be given more resources from HR. They can be given bigger benefits, things along those lines. And these are the things that are going to keep that team together going forward. But the picture that you paint for them is critical to them making sure that they don't go anywhere, because ultimately those part of that multiple is the acquire aspect of this, and the fact that they're again hiring and getting that F1 racing team so they can win tomorrow and win new business tomorrow, right? So it's critical that for everybody to make sure that stays as a unit. That helped.
Yeah, thank you. We have another question here. We touched on this briefly, but maybe we went a little fast. The different types of acquirers. We cover this, but do you mind just kind of reiterating? I think you mentioned there are 4 different types. Be great just to restate those, Chris.
Yeah, absolutely. And so, I think you could maybe use, they could be grouped differently by different types of investors, institutional and strategic and things along those lines. But really, the top 4, I guess I would see as far as types of buyers I'm seeing. First and foremost, I'm seeing other agencies, other Amazon agencies looking to acquire through growth and through acquisition, through a roll up, uh, and through a combination of other agencies get additional capabilities, but moreover build a larger entity that can then be sold, at 50 million, 100 million plus, that kind of thing. So again, other Amazon agencies, and you can consider that might be a strategic in some respects, maybe more of an institutional kind of investor, or if you will. So that being one, I would also then sort of split that into another bucket, if you will, and say that there's the outside agencies as well, 100 million plus digital agencies that haven't solved for Amazon. They may have solved for other marketplaces, probably Shopify, things along those lines. They haven't solved for Amazon. So that would say make that's another bucket. Again, is that a strategic move? Potentially, I think I would put that in that bucket. It's solving, the buyer, the sale gives them capabilities that adds to theirs, so it's more of a strategic move that way as well. The other, another buyer I'm seeing, just by the ones I'm actually seeing out there are other, like for instance, uh, SaaS solutions are looking. One of the things that they're realizing that there's no software without services. A lot of software has been tried. They try to just be software solutions. But the problem is if the ad sucks, if the creative sucks on that, in their ad software, it's not their software's fault. So often they're asked for those services, right? And so a lot of a lot of my customers, a lot of my buyers right now, I have two or three that are actually software companies looking to acquire additional services capabilities. Now, question becomes what happens to clients? There has to be matches there and those type of things as well. Um, and then the last one I would just say is there is the traditional institutional buyer out there that we've seen. If you're an owner in the space, you probably have been called on by them. Um, but some of those are just really just looking at the whole space as an investment. They really aren't adding expertise other than maybe resources, internal resources, operations, HR, finances, things like that. But for the most part, they're just looking to buy agencies and just keep them growing as investments. Again, sort of in a roll-up type of situation, but more of a if you will, a corral of investments to grow something larger, right? So, it depends how you define those buckets, but those are some of the kind of the buyers that are out there right now.
Thanks, Chris. Really appreciate you restating those, just clarifying that, and thank you. Sorry, I can't see your name, but I appreciate our LinkedIn audience there for asking the question. Couple of two quick ones before we wrap up. Going back to Arthur's question, he's very interested in the split between upfront versus earn out. Is it 10%? I think later he says, is it 40%? It all depends, but what is a realistic expectation? Yeah, I think you covered it briefly, but it'd be good to restate that.
It really depends. One of the biggest questions before that is what cash is on the table. The deal can have different structures as far as it could be 75% cash, and then some based on some equity of the larger entity, or there could be a lot less cash and things like that. So that number, what is the first check that you receive, or what's the percentage of that? I haven't typically, the ones I've seen is it's closer to around 50%, and then there's another two checks smaller, just like a 20, 50, 20, 25 kind of thing based on performance, just roughly. But I've seen those numbers all over the place. It really depends, again, how it's structured.
Thank you. This was a great one to finish on, I think. So thank you for asking this question. So we've talked about all this. It's a great way to sum it up, but let's make it practical. How do you even start this process, right? And, for me, it always seems to be this challenge of, how do you you don't really want to put a billboard out in front of your business on your website going, we're for sale, because, what does it send the right message to clients and prospects? So, how do you get into this, and how do you start?
Yeah, and so the short answer is you enter the M&A world, right? And of which I help in a couple degrees. But to get started, really, you're going to look at three phases. There is a preparatory process to this. So again, the sooner you're thinking about it, even if you're thinking about it now, you should start having conversations. Read my report, talk to me, or I can introduce you to some M&A firms that'd be happy to walk you through the process in detail. But really, there's some things you'd be working on now. and depending on how much that window is, has how compressed and how much time that takes you to do those things. Again, putting your best suit on to go forward is the first step in this process. But to answer your question is then how do I go to market, right? That's the deal. That's the responsibility of your M&A advisor firm. They're going to have some connections, be able to put you in some of their investment networks. It depends on the firm as to who they can lure in. They may have more institutional buyers. They may be more connected within, with other agents, Amazon agencies. But what Enreach brings to that process at that point are the buyers. Mainly the function of Enreach is to match make. Right now I have dozens of buyers that are looking for different types of agencies. Some are looking at everything that's going by. I want to hoover up, really, or take a strong look at anything that goes by. So the short answer to your question is through your M&A representative, which again I can help you with, and then the combination of Enreach is really at that point. Then you can have dozens of conversations. But this is not something you would want to advertise. It's not something you'd want to blanket out there for the reasons that Paul, you mentioned, is that it's something that you want to custom match. These are very serious conversations that you obviously that you want to have your best face forward and those type of things. And it's not something that you really want to use a broker for, or something you want to kind of go to the open market for, unless it's a last alternative. And you may, for instance, be too small. You may have issues with your business. You may need to get out sooner than later, in which case those brokers and some other functions can become useful. But for the most part, you're really looking at handheld introductions.
Great. Chris, I think we're going to have to wrap it up there. Just to our audience, apologies, we haven't got to all of your comments and questions, but both Chris and I will jump in to the comment section on LinkedIn and provide some verbal answers there. Chris, huge thank you for coming on, sharing all your insights and knowledge around this space. It's, as we can see from the range of questions we're getting, it's a very hot topic right now. And I appreciate there might be people here who'd love to sort of pick up a conversation with you, explore some things, bounce some things off you. What is the best way for them to get in touch with you?
The best. I'm Chris at Enreach. It's Enreach without the I. And or on LinkedIn is always best. Would highly recommend folks to read some of the reports that have been going out. It's kind of a journey for me, kind of into the industry, get my arms around what's going on, especially with the last few weeks and the prior months to that and the coming months and things like that. So there's a lot of answers in there. Happy to follow up that with a range of meeting and have further discussion around all of this, and then ultimately help you find an exit as well. So, okay.
Awesome. Thank you so much, Chris. Really
Thanks,
appreciate your time.
Appreciate it.
All right, everyone, that is a wrap for today's session. Now, if you are an agency owner considering your next move, make sure you check out Chris's Q2 2025 Amazon Agency Investor Report. We will put a link on our website with all of the show notes in there as well, probably the next 24 hours. So it will be there too. This session has been recorded, and anyone who's registered will receive recording of that, so feel free to share that with your broader network. And of course, head to merchantspring.io, either if you're looking for agency analytics, or if you're just looking for a wealth of other resources, particularly around agency best practice and topics that agency owners should be thinking about. That's merchantspring.io. I'm Paul Sonneveld. See you next time. Take care.